My name's Jeff Coppolo. I'm the Chief Revenue Officer for Trevipay. We're a global B2B payments company building networks around the world, private networks for buyers and sellers. And what I wanted to talk about today is the power of these networks and how building trust and loyalty through these networks can help businesses expand their e-commerce channels. There are very well-established networks out there. If you think about Visa and MasterCard on the B2C side, in consumer payments, these have been around for decades, and there's an inherent trust factor between consumers and merchants. Merchants know they're going to get paid on time. Consumers know that they're protected if they use a Visa or a MasterCard or an American Express card. But the payments landscape within business and B2B is obviously far more complex. There's a lot more plumbing behind the scenes. There's been a lot of attention paid in the last decade or so to sort of optimize B2C payments. And now a lot of that work's starting to happen in the B2C space. So today we're going to talk about the power of these networks and how you can engender that loyalty and stickiness to grow your business with buyers. So first, let's sort of level set on the size of this opportunity. Everybody knows there's huge growth in B2B payments. In Europe alone, it's expected to be a $2 trillion business by 2025. Globally, this is expected to be about $7 trillion by 2030. So, like I mentioned before, everybody's sort of moving from the B2C space in payments into the B2B space, but there's so much work to be done. A lot of it's fragmented, but everybody recognizes how big this opportunity is to sort of optimize the B2B landscape to make it more similar to what's happening in B2C. And obviously, businesses recognize this too. They see the opportunity. 65% of businesses cite e-commerce as the most important sales channel to help them achieve their strategic objectives. And of those same businesses, 61% cite that the ROI on e-commerce is higher than other sales channels. So if you think about things like direct sales, selling through distributors and dealers, sales teams selling to key accounts, all of those channels really don't compare from an ROI perspective to e-commerce. But again, there's so much complexity behind optimizing e-commerce for business. So what are the big market shifts happening within B2B payments and B2B e-commerce? These are really the main three. So starting with borderless commerce, obviously businesses are looking to expand into new geographies, but that comes with a lot of complexity. E-commerce is not limited by borders, so it makes it very easy without having to put boots on the ground to go to other countries and expand your business. But now you've got to do things in multi-language, multi-currency. You've got to understand the compliance and the regulations that go with operating in foreign countries. But the opportunities are obviously quite large. Secondly, alternative payment methods at checkout. Business is different from consumer payments. So where credit cards are common, and certainly alternative payment methods unique to countries like GiroPay and so forth, and others in countries like Germany, with business payments, businesses like to pay on trade credit. You can call it buy now, pay later, pay on account. That's the preferred method of payment for business, not so much credit card. In many cases, the average order value is too high for a credit card. The seller doesn't want to incur that expense. And consumers may not even have the credit line to make a large average order value payment. The third disruption is around distribution channels. So a lot of businesses are trying to sell direct to the end user. Today, it's common to see distributors, dealers, third parties in the middle. But there's a lot of white space where they're trying to understand who that end customer is. So businesses are wanting to sell direct to that end purchaser, but again, it comes with a ton of complexity. So how do you do that? You've got to onboard those buyers, you've got to underwrite them, you've got to be able to initiate invoices and all the specific data around those invoices, you've got to manage the accounts receivable, you've got to take risk, potentially, if you're going to underwrite merchants and deal with the accounts receivable. So these are kind of the big shifts that are happening in e-commerce, and this is what everybody's trying to solve as businesses are trying to blow out this channel and grow versus other channels. But there's one kind of overriding theme in this whole thing, and that's this blending, this merging of expectations from B2C to B2B. So we're all consumers. It's very common for somebody to be on a website, in their browser. Maybe you're doing some research on something that's personal. Maybe you're buying a set of golf clubs. You could be one tab away from making a business purchase, and yet the experience is very, very different. This is an example of one of our clients, Best Buy in the United States. They've done a very good job of sort of optimizing and making that experience from B2C to B2B look very similar. And that's really what's needed. The expectations are really high in business payments to make it like what's happened in B2C. And this brings me back to sort of the power of the network. If you can build this network and address all of the complexity and all the issues in B2B payments through a network, again, think about what exists within the consumer payments network like Visa, MasterCard, Amex, and so forth. If you can build a business network in B2B payments, you can solve for all those same things. We will get there. Trevipay is building these today, specifically private networks for individual companies and all their buyers. But this is the future of B2B payments, is building these networks. We have a vision someday to open this network up. So today we've got maybe 150,000 buyers underwritten, maybe 30,000 sellers underwritten. But imagine a world where there's hundreds of thousands of buyers and sellers, and now they can use those credit lines that have been issued by Trevipay to buy at just Best Buy. What if you could use that at any merchant? Now you've got this massive open network, and it's a huge opportunity for everybody. But if we're engendering loyalty and stickiness within customers, this is where the private networks come in. So what are the components to building these networks? These 5 things are the main things that need to be covered if you're going to have a successful B2B e-commerce network. I'm going to get into each one a little bit after this, but obviously you need a modern B2B payments experience. You need to be able to address invoices on a global scale. Businesses want to pay on invoice. They want to pay with purchase orders. The line item on a credit card statement is just not going to be enough within a business environment. You need to address fraud and risk management. It's obviously a big deal with business. The stakes are higher, the numbers are bigger, so it's really important to have the experience and the tools to address fraud. Managing accounts receivable, big part of business. People are paying on trade credit. They've got net terms. They might be paying in 30 days, 60 days, 90 days. The management and the automation of that is critical. And then I mentioned trade credit in instant decisioning. Rather than paying on card or paying on the traditional payment methods that we think of, it's important to be able to offer trade credit in a way that emulates the seamlessness and the frictionless of a B2C payment. So let's talk a bit about each one of these. So instant decisioning and trade credit, or pay on account, or buy now, pay later for business buyers will help merchants attract buyers and build loyalty. This is how businesses want to make payments. Obviously, corporate cards exist. They're appropriate for a subset of payments and certainly lower AOVs. But for bigger purchases and repeat purchases, business buyers want to pay on trade credit. Before they can pay, they need to be underwritten, and that's a big deal. So when a business is going to take this on, you can do it yourself or you can find a partner to do it, but it's really important to have an automated underwriting process and instant decisioning so that at the time of checkout, if they don't have a line of credit, they can apply and within 30 seconds be issued a line of credit, almost like a consumer payment would, and then follow through on that payment. So the companies that do this well, that underwrite quickly and provide trade credit that's useful to those buyers, are going to win. Modern B2B payments. Again, this is all about emulating the frictionlessness, if that's a word, and of B2C payments. So offering trade credit in a B2C-like acceptance method, so the authorization and the capture of a trade credit payment, but having that happen instantaneously is really vital. Being omnichannel, so offering a way to utilize that payment method both on mobile, online, and even in a card. So one of our customers is Staples Canada. We created a mobile application in addition to the online way to pay with trade credit and a physical plastic. So it's basically just a closed loop way to use it, and it really doesn't matter whether the customer goes on their computer to make a purchase, goes into a store with a physical card or uses the app with a barcode or a QR code to leverage their trade credit, line of credit, and make that purchase. It includes invoicing and billing in a centralized location. Business payments require a lot more data than a consumer payment. So all that information has to be captured. There's got to be an ability to edit it, and it needs to sit in a portal. We provide buyer and seller portals, so both sides of the transaction have access to that information. And then it needs to be easily uploaded into ERP systems, accounting systems. One of the biggest pain points in business payments is that whole reconciliation process. A lot of times they may only accept cards, and it's very difficult to reconcile card transactions with sales in an appropriate way. I talked a little bit about reducing risk and fraud. Obviously, you need a robust, sophisticated fraud management system to avoid losses. And really the end result of the trade credit is providing more capital for buyers, giving them the ability to make those business purchases, maybe even sell the product before the payments due, and then make their payments. But cash flow is everything for buyers. Certainly in the SMB and the SME space, when you get to the enterprise level, they have pretty easy access for capital. But smaller businesses, cash flow and working capital is really important. Managed accounts receivable. So another big component to building a network. Businesses want to receive invoices on their terms. So this is something we would work out with a seller. They understand their customers. They understand whether they want 30-day terms, 60-day terms, 45-day terms. It's important to understand your customers and provide invoices and invoice them on terms that work for them and for their cash flow needs and for their business. I mentioned access to the data, purchase order numbers, invoice numbers, approvals, hierarchies. It's important that all this information is captured so that, again, things can be reconciled on both the buyer side and the seller side. And then supporting those integrations. It's important that a partner or the business is integrated to the ERP systems and the accounting systems that those buyers are using so that all those payments and sales can be reconciled in a seamless way. So again, it's just super complicated in the B2B world. We're talking about a lot of things here, but if you break all these things down, there's a lot to fix. And it's why today business payments are still so paper-driven and so manual, but all that's changing and it's all happening very quickly. I probably should have mentioned earlier, there's been, largely because of the pandemic and COVID, there was already a movement from the B2C to B2B, and it's only been accelerated in the last 2 years. Everybody is trying to find more efficient ways to make B2B payments happen like they are in the B2C world. So I mentioned that companies are looking to expand globally into new regions. Global invoicing is a key part of that, but it's, again, really complicated. So if you've got to initiate invoices and manage invoices and all that data, it requires integrating to new and different data sources. Every country's different. There are different rules, compliance, taxes, so many things, issuing invoices in foreign languages. All these things have to be accounted for if you're going to operate on a global scale. You know, much different than operating from your home country. Going just to one country adds a whole new level of complexity. But integrating to data sources to capture the information to be successful, being able to underwrite in other countries. You know, in the US, there's lots of tools that work pretty well to do KYC and AML checks on a business. So it's pretty easy to automate. That doesn't work in all countries. Finding tools in some countries can be really difficult. So you end up having to move to more of a manual review in order to underwrite and approve those businesses. Things like currency exchange, cross-border taxes, FX risk, just a lot of complexity around invoicing and global expansion. But this is where the growth is. This is where the big ROI is. So if these things can be solved for, businesses can grow through this e-commerce channel. One of the big reasons that's holding businesses back is this growing threat of business identity theft. So this is where a bad actor is assuming either a dormant business's identity or even an active business. But it's growing and it's literally stopping more than half of businesses from approving buyers in order to sell to them. So again, speaking to the risk aspect of this, if you can have a robust fraud management system, and if you can find a way to flag the bad actors, but not have false positives where you're declining people that are actually good customers, you're going to win. If you decline good customers, your competition's going to win over those customers. So generally speaking, with regard to fraud and risk, the idea is obviously grow sales, not risk. So as more and more customers are going to be acquired online, this becomes an increasingly important factor. These 4 bullets sort of highlight the key things around managing growing sales while managing risk. Obviously, you need a sophisticated fraud detection process and a strong track record for decisioning, for risk decisioning. There's lots of companies that specialize in fraud and risk management. You can partner with someone like that. We do it ourselves internally. But really important to not only have the tools, but have the experience. The fact is, we all know these fraudsters move fast. They're always one step ahead of us. So it's really vital to have experience, see what's happened, and stay on top of that. I just touched on false declines. Having consistently low rates of false declines is important. You don't want to turn away good customers, but it can be very difficult to discern who's good and who's bad. You know, if you look at the guys that specialize in fraud detection, this tends to be what they focus on the most, because they all start to blend together and seem the same, but you'll find that the experts will focus on having the fewest false positives. This notion of absorption of fraud risk for you so you can focus on selling. So at Trevipay, when we provide these private networks, we actually assume the risk of all of this. So we assume the transaction risk and the underwriting risk on the merchant. So if we were to board a buyer for a seller, we're now holding the risk on those future transactions. And there are third parties out there that might do the same thing and might charge a higher fee for it, above and beyond a SaaS fee for managing risk. But I think this is something you should think about. Fraud losses can be high. They can be very significant. There are options out there where a partner can absorb that risk for you. And then access to rich data to identify when to accelerate and when to pump the brakes. These things happen in waves. There are always new fraud threats out there, but having access to that rich data to tell you what's going on and where to spot the pitfalls is really critical. Which brings me back to the power of the network. So if you can pull all these things together and manage it well, there's a handful of key benefits. You're going to engender loyalty. You can operate at scale with lower cost. You can certainly increase your revenue. Comes with complexity, but there's more margin there, so you can certainly increase your revenue. So I thought I'd sort of bring this home by talking about a case study. These are a couple clients of ours. Digital River is actually a partner, and Lenovo is one of our customers. The challenge that Lenovo had was they wanted to scale their international B2B sales. They wanted to provide their B2B buyers with a streamlined, consumer-like purchasing experience. With Digital River as their partner, they launched Trevipay on their Lenovo Pro B2B online store in 14 countries with complete localization. With Trevipay, they now have a world-class, scalable, branded online payment program that offers buyers the ability to pay by purchase order with trade credit at checkout. So the solution provided that fully localized experience in 14 countries with trade credit as a payment method. I mentioned the online experience is fully localized. It's from the initial buyer application through payment, so we're underwriting in real time. We're providing the lines of credit to their customers. They have dedicated lines of credit that are off balance sheet. They're provided by Trevipay. They don't go to a bank to get those lines of credit. We manage the accounts receivable process for them. We hold the risk on all those transactions. So now they have a scalable e-commerce B2B payment solution that's working. So what was the result? So this program's only been in place for about 6 months. They've seen a 114% increase in the average order value. That's over their B2B sales within their B2B store. They've actually seen a 4.5 times greater AOV across all their channels, so that includes consumer. So having those dedicated lines of credit, having it operate just like a credit card, have it happen seamlessly and frictionlessly in that business environment. It grew the business AOV, and it's a lot bigger because you can imagine business transactions are higher, 4.5 times here. We've also captured 12% payment share. So across Lenovo in 6 months, 12% of all payments is now happening on Trevipay. That's pretty amazing. And that 12% actually represents 16% of their total online sales in dollars, which is because the AOVs for business are higher. So I think that's everything I've got. I'm happy to answer any questions if anyone has any.
Yeah, but the question was how you addressing fraud risks. Yep. What is the fraud risks? What have you done? Yep. So you can sure say that there are no risks. You can think about sales, not about frauds.
Got it.
Yeah.
Yep. So the question is, what have we specifically done around fraud risk? So I guess I'd say two things. Number one, we have our own internal fraud management system. So we've been doing this for 40 years. So we have a very sophisticated fraud system with all the modern tools that you would need to manage risk. In addition to that, we actually take the risk from the seller. So our customers, they don't have risk. Now, if they wanted to take on that risk and we had recourse to them, I suppose we would charge a lower rate. But the fact is, Trevipay assumes the risk for our merchants, and we have the tools in place and the experience over 40 years to manage that fraud risk. So if you were a customer of Trevipay, the network that we'd be building would assume and include that we would hold the risk on those transactions, both transaction risk and also account risk, underwriting the merchants. So if there was a merchant assuming an identity theft sort of, or account takeover risk, that's on us for having approved that merchant.
Hi, I'm Tevin. Thank you for sharing.
Sure.
Can you tell us about which markets you have the strongest network of buyers, and elaborate a little bit on pricing using Trevipay?
Sure. So if everybody heard that, the question was, what markets are we strongest in, and could I elaborate a little bit on pricing? So Trevipay as a company was part of a big world fuel services company for most of our 40 years. We were carved out about a year ago by a private equity firm. We've been around for a long time. We process around $7 billion in transactions today. Our clients are people like, I mentioned, Best Buy, Lenovo, Samsung. We're really big in transportation, having come from sort of that fuel business. So we've got big trucking companies like PACCAR. So in the US, think of like Navistar, Kenworth Trucks, Mack Trucks. And these are very complicated deals where you've got a dealer system, a distribution network. It's a lot about parts. So, Federal Express might buy a fleet of trucks, and now their drivers are driving all over the country, and all of a sudden they need brake pads or they need parts somewhere. They need to be able to go to any dealer or distributor within a state or a region, like wherever they happen to be, but they've already got pre-established contract pricing. So all those pricing hierarchies, consistency, no matter where a driver could be, that's all the stuff that's part of what we build. So, transportation's a big sector for us. Retail is a big sector for us. Really anything with a complex, the ideal customer profile for us is somebody that is making a repeat purchase, at least say 6 times a year. The average order value tends to be a little higher. It could be as small as $1,000, but we've got credit lines that range from $1,000 to $22 million. So our largest credit line to a buyer is $22 million. In terms of pricing, it's less expensive than a credit card. And the biggest factor in terms of what that price is float. So it's typically the seller that is paying our fee, just like the seller would pay interchange rates on a credit card. Rates on corporate cards can be over 3% in the case of like an American Express. With the trade credit payment method, you can get it down to close to 1%. That's on like a zero flow program. So I mentioned, there are big companies that really don't have cash flow issues. They're okay getting paid in 30 days and giving their customer 30 days to pay. That's what we would call a zero flow program. So we collect the payment from the buyer on day 30. We pay the seller on day 30. that can get down to near 1%, a lot less expensive than credit cards. You know, if you go out 45, 60, 90, now you're paying, you know, a few basis points, say, per day for longer terms. Typically, it's probably in the 1.5% range, but it's better than a credit card on the rate side.